All right, what's up, everybody? Welcome back to another episode on Keeping It Real with Credit. And on today's episode, we're gonna do something, a little bit differently. I'm gonna go ahead and talk about this video that I've been thinking about a lot, and it's about credit card usage. The correct way, in my opinion, on how to use a credit card. I've been using this strategy here for quite some time now, a few years already, and it's really helped me a lot when it comes to growing the amount in the bank account and leveraging my credit in my credit cards to be able to pay for day-to-day things like monthly bills, gas, food, but using it very strategically. And hopefully in this video, I let you guys know exactly how I do it, and maybe it'll give you some insight as to how maybe you can apply this to your everyday life. See, I've always said that I have this thesis that I believe people are using credit cards incorrectly. And to be honest with you, there's not a lot of information out there. And it's not to the best interest of banks and other companies because they do profit from this. Keep in mind, guys, that credit card companies make money off of the fees, the interest, annual fees, and things like that that they charge you on a month-to-month basis. There's actually ways where you can save on not paying these fees by using the strategy, and also, confirming and verifying with your bank on whether, what fees apply if you do choose to pay your balances in full. I'm gonna be explaining to you what I do with one of my credit cards, but this strategy I actually do with a total of 6 credit cards. With that being said, guys, part of the reason I'm making this video is that here in my company and also on the YouTube channel, I'm getting a lot of questions regarding, how to use my credit card properly. And there's this whole stigma on social media, and ever since we've been growing up, on credit cards are a scary thing. Credit is a scary thing. Debt is bad. And I actually see things the opposite way. And it wasn't till when I got out the Marine Corps, and for a period of time as I was adjusting and finding a job where I was having some difficult times financially, where I kind of forced myself to try this out and think this way, and it's worked tremendously. So with that being said, let's go on with the top. By the way, hold on. Let's try something a little bit less unedited. So guys, I'm gonna be taking you guys right here, and we're gonna be showing you how I do things in 3, 2. So hopefully everything is in view here, and I'm gonna be using this calendar as kind of like a guide. By the way, guys, this calendar is marked as of March of next month, so that you guys can get an idea. And let's assume, right, that you've had your credit card already for quite some time, and you're getting ready or prepared to do the strategy. I've also included my very own Quicksilver card, one of my very first credit cards, and it's one of the first credit cards that I tried this with, and I kind of set the tone for the remainder of my credit cards that I'm gonna be talking about here shortly. All right, guys, so with that being said, when it comes to this credit card usage, first is very important to know that there's a due date and there's a report date. And for the sake of this explanation, what I'm going to go ahead and be doing is we're going to assume, we're not going to assume, because this is what it is. This Capital One Quicksilver credit card has the due date right here on the 1st, right? On the 1st. That is my due date. The report date, which we're gonna mark here with red, is actually on the 5th of the month. So now what is the difference here? The due date is the date in which you have to pay at least the minimum on this credit card. Usually it's starting off at $25. Then the report date, this report date is the day in which the credit bureau, this bank, Capital One, will report the information over to the credit bureaus. And what that means is the way that I know the report date is, one, you can go ahead and give a call to Capital One and ask them, hey, when is my report date, or when is my end of cycle date? Two, you want to go ahead and also look at your statements. The date in which the statements say up in the right hand corner when you receive it in the mail is typically going to be the date that they report. So a statement is basically a copy of what they send over to the credit report, to the credit bureaus, whether you paid or not on time, what your balances is, and so on and so forth. The reason why it's important to know your due date and your report date is because you need to stay in control as to what reports over to the credit bureaus. Now, for example, it's important to know that you should only use the 30% rule, right? 30% rule is basically don't use more than 30% of your limit. So it's basically whatever your limit is over 3, divide that by 3. So for example, if we had $1,000 credit card limit, you're not supposed to use no more than $333.33 is what I think that equals out to. If you feel that you need to use more than that over the period of time of your card, ask for a credit limit increase. There's different strategies on how to, I guess, sort of guarantee that increase. But for the most part, let's work with these numbers over here. Now, something to think about when it comes to this due date over here. In my case, I always pay my balances in full. 2 things. 1, I don't mind paying my balance in full. If I owe $500 on this credit card, I will transfer it and pay $500 to the credit card, because to me, there is no difference than from transferring money from a checking to a savings account than from a checking to a credit card. Why? Because it's available right away in the same way. And as a matter of fact, Capital One, if you pay the balances in full, they charge you 0% interest. So it's really a matter of transferring it over. Also, I also realize that I have to wait till the due date, to the report date, till it reports to the credit bureaus. So I pay my balances in full. My balance is now 0. The second, the third, the fourth, and then the 5th day passes on, and I don't use that credit card until the 6th of the month, meaning all of my bills that I can possibly put on a credit card is on this credit card. We're talking about car insurance, cell phone bill, Comcast, Netflix, even things like gasoline, haircuts, you name it, I put it on this credit card. However, I disperse my monthly expenses amongst 3 credit cards so that I ensure that I'm never using more than 30% of the limit. 30% of the limit across all my credit cards I can actually afford. So on the 1st of the month, I pay all my credit cards in full. The reason why that's important is because 30% of your credit, which is the second biggest factor on your credit, has to do with the total availability of all your credit cards or credit combined. So if I know when my due date is and when my report date is, now I'm in control as to what reports over to the credit bureaus. And when you're in control of what reports to the credit bureaus, you are now more in control of your credit score. By scheduling all my bills the day after the report date, you see, my card will report 0 every month, but the credit bureaus will never know, ever. They will never know what you did after the report date. So you can literally max out your card here the next day. The credit bureaus will not know. They will still continue to pay for 0. If you use your card any of these days and you pay it right away, I think it's a waste of money because the credit bureaus will not know. Now the banks will love you because they're going to see activity, but I would rather save my money to play this same game here the following month. And the reason why that's important is if you were to use 50% of your credit card limit and you let the report date pass with 50% used of your credit card, your score will drop because, again, the second biggest factor of your credit has to do with the availability of credit. If the next month you pay your balance in full and you don't use it and you let that card report zero, your credit score will significantly go back up, because again, the second biggest factor on your credit is that, right? So hopefully, I know I made a video about this before, but hopefully that makes a little bit more sense as to how I actually use my credit cards. The cool thing about this strategy right here is that I've been able to shred, actually, I don't have a debit card at all whatsoever. My checking account is only there to basically receive money, right, from either my businesses or investments. They're only there to receive money and only to dish out to my credit cards as I see fit. Nowadays, a lot of people are basically using their debit cards and their credit cards. And no wonder why people get stuck in that way. The reason why people get stuck in that way is because they apply all their bills onto their debit card, and everything comes out of their debit card. In addition to that, they also have a credit card, which they're also using when they don't have either money in their debit card, or or maybe an emergency kicked in, or whatever the case may be, and then they use their credit card. So now the credit card becomes an additional bill, tapping into the source from the debit card. What I do is that I allocate all my bills and expenses to my credit cards, and what that does is that I only send one transfer out from my checking to my credit cards, and I pay a zero balance because I'm paying all my balances out in full. So in theory, my checking account will always grow because I'm only dishing out less than what's coming into my checking account. This prevents me from using my checking account. It grows my checking account because I'm not tapping into that credit card, that debit card at all whatsoever. And I'm leveraging my credit to be able to do my day-to-day expenses. Now, the cool thing about this credit card right here is that it has 1.5% cash back on absolutely everything. With that being said, that means that all my bills that I have allocated on here is 1.5% cheaper. And that cash back that I'm generating from these bills, I just recycle it back into the balance. And this way I pay a little bit less as that cash back accumulates over time. That right there in itself is one of the strategies that I've been using with 6 credit cards. So for example, I have 3 credit cards that are due on the 1st. I also have an additional 3 credit cards that are due on the 15th of the month. So while I pay all my balances in full on the 1st of the month, and I don't use the credit cards that are due on the 1st, I don't use them until after the 6th of the month. So from the 1st to the 6th, what do you think I'm really using for gas, for food, for haircuts if I need it, and little day-to-day expenses, or maybe even last-minute emergencies? I'm using the cards that I haven't reported yet on the 15th. Once these cards that are due on the 1st report and they got out of the reporting phase, I stopped using these credit cards that I used from the 1st to the 5th to get me by, and I play the same game with these guys, due on the 1st, and about the 19th is when it's not due. Don't take my word on it for it, guys, because when you guys go to call your bank, they're gonna be able to let you know exactly when your due date or end of cycle date. Once you have those dates, then you wanna go ahead and organize or change the due dates of all your bills to fit around how you've organized or allocated your credit cards. All right. You also want to look for credit cards that give you some sort of incentive, either a cash back, travel miles, or points. Remember, guys, $1 in credit goes way further than $1 in a debit card. Not only because when you spend $1 in a debit card, you have to wait till the next payday to get that dollar back, but when you spend $1 in a credit card, you may get miles, cash back, or points, but you don't have to pay that dollar in full right away if you don't need to. You can pay 50% of that dollar and pay the 50% less as long as you pay that amount before the report date. So hopefully with that regard, it makes some sort of clear sense as to what we're actually talking about here. So guys, with that being said, I hope that video made a lot of sense to you. Remember, the only reason I'm bringing up this strategy is because I've been getting a lot of questions or concerns regarding credit card usage, and I see a lot of people really being stressed out about credit cards. They want to close them so bad. And keep in mind, guys, that credit or debt can be leveraged for good to generate you more income, whether it's through a business or an investment. Sometimes you want to use other people's money to be able, aka like the banks, to be able to give you an opportunity to give you a more steady stream of income. When you work at your job, what you're doing is you're generating some sort of earned income. And the idea is not to spend your earned income on things that's not going to generate you back some money. So please be intelligent about how you're using your money, how you're using your bills, and leverage your credit, which is other people's money or the bank's money, to go ahead and invest in things that are going to generate you more income. And sooner or later, you'll probably be in a position where you don't have to work for your money and you're making money while you sleep. I also wanted to mention that to you guys in regards to, maybe reallocating, looking at your bills or your current situation from a different perspective. And if you allocate and rearrange your bills from your debit card to your credit card, maybe it'll make things a little bit more organized and easier for you guys to live on your day-to-day and not be so stressed about living paycheck to paycheck if that's what your current situation is. With that being said, guys, thank you guys so much for the love and support. I'm your host, Ray, from Keeping It Real with Credit, and I hope you like the information on this video. Make sure to like, comment, subscribe, and let me know if you understood this strategy. Let me know if you have something in place that can definitely help our Keeping It Real with Credit community. Don't forget that if you're looking to increase your credit or improve your credit, feel free to give us a call at 1-888-424-0058, option number 1, to take advantage of your free credit evaluation and let us help you out when it comes to increasing your credit score to live a more, I guess you could say, abundant, healthy financial life. That being said, guys, thank you guys so much, and on to the next episode on Keeping It Real with Credit. Peace.